Hey everyone, welcome back to Corporate Decoder. Today we are diving into the annual report of a company that's hoping their profits go sky high like their apartment buildings without ending up with any surprise bills from down below. Let's decode what Essex Property Trust, a major player in the West Coast apartment scene, has been up to. First up, a little warning, we will be talking about some future predictions from the company, like how well they expect to do. Keep in mind that these are just guesses and the future could look very different. Essex is in the business of owning and managing apartments, mostly on the West Coast. By the end of 2024, they had a piece of 255 apartment buildings with over 62,000 homes. They also dabble in developing new properties. They make smart choices on where to invest by doing tons of research. They look for big cities, places where it's hard to build new apartments, and where people want to rent instead of buy. Essex focuses on keeping their tenants happy and their buildings in great shape. This means good property management, planning for improvements, and even tearing down and rebuilding parts of their properties. During the year, they were also busy buying up more properties and ownership in existing projects, including communities in California and Washington State for over $800 million. They also sold an apartment complex for over $200 million. They are always looking to sell properties that don't fit their long-term plans and invest the money elsewhere. Essex is preparing for the future by scouting locations and getting permits for new development projects, already spending $52.7 million on these future sites. To pay for all these activities, Essex took on more debt. They issued $350 million in notes, and later they issued another $200 million. They used some of this money to pay off other debts. The company has also the option of selling more shares to raise money, but did not do so. On the flip side, Essex did not buy back any of their own shares. The company cares about its workers. They focus on training, safety programs, and fair pay to keep a diverse and talented team. They engage with employees via engagement surveys. Because they are in the real estate business, in places that are prone to earthquakes, the company has a few insurance policies to protect themselves. Now for some potential bumps in the road, rent control laws on the West Coast could limit how much they can charge, cutting into profits. Future outbreaks of disease could cause all sorts of problems, from tenants not paying rent to market fluctuations. When they buy new properties, things might not go as planned. They could overestimate how much money they will make or run into unexpected costs. Because most of their properties are on the West Coast, anything that hurts those economies, like a big earthquake or a tech industry downturn, could hurt Essex. Changes in laws, especially in highly regulated places like California, and rising taxes can make it harder for the company to make money. Essex relies heavily on computers and the internet. If they have a data breach or their systems fail, it could be a big problem with real consequences. A number of lawsuits were filed against the company, and others alleging collusion to artificially increase rents. If the stock market gets rocky or it becomes harder to borrow money, their plans for buying and improving properties could be in jeopardy. Because Essex is structured as a REIT, real estate investment trust, changes to tax laws could hurt their ability to operate and pay dividends. If they find any big problems with their accounting, it could make investors lose confidence and the stock price could drop. The company has a team and plan for dealing with cyber attacks, and the board of directors watches over these events. In order to do business, the company relies on certain software vendors. If these partnerships were to end, it could harm business. Service interruptions may cause our tenants to terminate their leases or may result in a reduction of rents and/or increase in our costs or other issues. Increased public, media, regulatory, and governmental scrutiny of the housing industry could materially adversely affect our business, reputation, and results of operations. Okay, that's a lot of risks. But how did Essex actually perform in 2024? Well, total revenue went up 6.4% year over year, but the sale of properties really gave the company a boost with a hefty gain of $175 million. Net income, a simple measure of profits, almost doubled. The company's accountants have audited their numbers and say that the company maintained, in all material respects, effective internal control over financial reporting as of December 31st, 2024. The company needs to follow a ton of environmental laws. This could mean they need to clean up contamination at some of their properties, which could be costly. The company does not have any accurate predictions about possible lawsuits that could occur. The stock price might go up or down a lot based on many things, including the local California and Washington economies, as well as the market. So, where does this leave Essex Property Trust? They seem to be in a good position owning properties in desirable West Coast locations. Their focus on research-backed investments and customer service is a plus. However, they face significant risks, including potential rent control, economic downturns, and expensive insurance policies. Overall, the company is well managed, but it's hard to predict legal challenges. In terms of a price target, let's look at comparable REITs and historical data. If we assume a similar growth rate for the market, a reasonable price range would be around $250 to $260 per share. Given these factors, I'm leaning slightly bullish on Essex Property Trust, but advise keeping a close eye on interest rates and legal challenges. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and let me know what company you want me to decode next.